I'm joined now by Polly Gilbert, who's from Tembo Mortgage Brokers. You must be so busy right now, all mortgage brokers across the country. What sort of conversations are you having with your clients?
I mean, it's fair to say that this has sparked a lot of panic for first-time buyers, but also for people who already own a home and their remortgage might be pending. So we're having, I guess, to deal with a lot of reassurance and helping people understand what their options are. And the one thing that I would say is it is so important to go and seek professional advice because there are options. I mean, just there listening to that segment, people are talking about the potential of losing their homes, but all lenders and all mortgage brokers will be literally sitting there ready to help people who are in that situation.
The panic that you describe, who are you blaming right now for that panic?
I mean, it's hard to separate the fact that the mini budget happened and this has followed almost immediately afterwards. It looks like things are starting to settle slightly. So, for example, a 5-year fixed rate mortgage is actually tracking as a lower interest rate than a 2-year, which is something we have not seen in years. And that indicates that confidence in the market is starting to stabilise a little bit, but it's fair to say that the budget seemed to kick all of this off.
Yeah, we've had an ever-changing fortnight, haven't we? Given you've just described it's starting to settle, what is your advice for people? Should they be looking to fix for 2 years or 5 years or even longer right now?
So firstly, speak to a professional about it. Go and speak to your mortgage broker if you have someone in the family, someone you've used before. 2 years, 5 years, 5 years are looking quite attractive at the moment. We do have some customers actually who are looking at tracker or variable mortgages. So to give you an indication, yes, we're talking about 6%, we're talking about 5% for fixed mortgages, but for tracker mortgages, actually they're around 3% and you can get a deal at under 3%. So for people that have the risk appetite, there is the potential for looking at a tracker mortgage. You can sometimes find them where there are no early repayment charges. So that means that you can lock in or you can kind of get your mortgage at maybe 3% on a tracker deal. And once the fixed rate market is looking a bit safer, a bit more comfortable for you, you could then look to move then.
What impact do you predict that this could have on the housing market?
I mean, the big changes we're seeing from lenders at the moment is affordability. So affordability is getting tighter. We've obviously seen property prices increasing and continuing to increase. I think that does pose a big problem for people as affordability is really getting stretched. So there are quite a lot of options out there. And this is why I would always say people need to, knowledge is power. Go and speak to a mortgage advisor. There are products out there, joint borrower sole proprietor mortgages, where you can add additional incomes. So for example, if somebody was in a situation where they're looking to remortgage and they cannot afford that mortgage on their own, there is the ability to add additional income to your mortgage to increase your affordability. So it is a really scary time. There are options out there. I really would encourage people to try not to panic and speak to an expert.
Some real practical reassurance there, Polly Gilbert. Thank you very much. I'm sure a lot of our viewers will appreciate that. Thank you, Polly.